Well, it certainly has been a pretty wild time in the market. I really do believe this is playing with fire. And we're a bit concerned. I've been getting the question, what keeps you awake at night? Honestly, the one thing that keeps me up at night is that as the market goes down and our strategy is punished disproportionately, what keeps me up at night is knowing that some people are going to panic if they're looking at their accounts on a day-to-day basis. I think that the innovation stocks that have been pummeled in here, many of them are a quarter to a third of where they were earlier this year. I believe they are going to be the big winners once we confirm the inflation is transitory, that there's a recession risk out there, and when there's a fear of a recession, value stocks get hit hard. And I do believe there is something to this. And when inflation gets hit, value stocks get hit hard. Now, the stock market, again, year to date, we've got energy up 45%. We've got financial services and real estate up roughly 30%. Value has been screaming this year. But I have just given you a scenario that would put a screeching halt to that value, that move toward value stocks. And that's this inventory buildup. The value stocks are the ones most exposed to it. So we'll see what happens. And in fact, Nancy Lazar of Cornerstone Macro has likened what could happen now to the flip side of Y2K. So in the move up to Y2K, companies scrambled to buy and install as much technology as possible, refreshed all of their tech ecosystems because they didn't think their computing systems would be able to handle the switch from 1999 to 2000. And then the rest is history. It ended in tears, of course, for the technology sector. What's happening now is the technologies, the seeds for the technologies today that are evolving these 5 innovation platforms, they were all planted in the 20 years that ended in the tech and telecom bubble. And they've been germinating for 20 to 25 or 30 years, and they're ready for prime time right now. The costs are ready, meaning they're low enough, and the technologies are ready. Meanwhile, in the tech and telecom bubble, value looked like it had 2 left feet. Value was the big winner, the very big winner for years coming out of the tech and telecom bust. I think that the innovation stocks that have been pummeled in here, many of them are a quarter to a third of where they were earlier this year. I believe they are going to be the big winners once we confirm that the inflation is transitory, that there's a recession risk out there, and when there's a fear of a recession, value stocks get hit hard. And I do believe there is something to this. And when inflation gets hit, value stocks get hit hard. So stay tuned for that. The other thing that I'd like to tell you, now these are just our strategies, but my guess is other innovation-oriented portfolios would have these sorts of opportunities. At the peak in February, our strategies, according to our estimates, which, as you know, Wright's Law plays a central casting role, our strategies, we believed, were going to deliver a 15% compounded annual rate of return over the next 5 years. So that's a doubling over 5 years. Not bad, nearly twice as much as what equity markets typically deliver over time. Today, assuming that our valuations are crushed down to FANG-like multiples in 5 years, we believe that our strategies, certainly the flagship, all of the innovation platforms together, are going to deliver close to a 40% compound annual rate of return. That's a quintupling over 5 years.
Tesla's worst month since 2022 coincides with Elon Musk's first full month in the White House. Tesla shares went down by 28% in Feb, which is their worst month since a 37% drop in December 2022. This is very ironic more than a coincidence because Tesla stock went up 50% when Donald Trump won the election and everybody thought it would help Elon Musk. And after Elon Musk's first month in the office, Tesla stock tanks by more than 30%. Tesla stock started off March the way it left off Feb, in the red. In CEO Elon Musk's first full month as a part of President Donald Trump's White House, shares of his electric vehicle company plunged 28%, the steepest drop since December 2022. The stock fell another 3% on Monday, the first trading day in March, pushing the company's market cap to about $915 billion. And the slide on Monday followed a social media post from Musk over the weekend suggesting that 1,000% gain for Tesla in 5 years is possible with outstanding execution. Revenue sank 8% from a year earlier and reported a 23% drop in operating income. Now, the company cited reduced average selling prices across its Model 3, Model Y, and Model S and Model X lines as a major reason for these declines. Tesla also stands to take a hit from new tariffs being implemented by Trump that apply to goods and materials coming from Canada, Mexico, where some of its key suppliers are based on. But the recent stock price decline is not just about what's happening in Tesla. And antics outside of Tesla are apparently taking a toll on the Tesla stock price. Elon Musk is currently leading the so-called Department of Government Efficiency, or Dojo, which is making sweeping cuts to the US federal workforce, slashing federal spending, and seeking to eliminate regulations and consolidate agencies, all while pursuing new government contracts for his companies. In addition to Tesla, Elon Musk runs SpaceX and the artificial intelligence startup XAI. He also owns social media company X, formerly known as Twitter. And though he has preached transparency at Dojo, Elon Musk has kept many details about the group's work and plans hidden from public view, according to CNBC, all while attaining unprecedented access to federal government computer systems and sensitive data without congressional approval. And on X, formerly known as Twitter, where his profile boasts 219 million followers, Elon Musk has also become more involved in international affairs. For example, promoting Germany's far-right anti-immigrant party AfD and drawing accusations of election interference by European leaders. The Tesla CEO has also used X to spread falsehood about how Ukrainians view their President Zelensky and to baselessly accuse him of seeking a forever war with Russia, according to CNBC. And in response, anti-Musk and anti-Tesla sentiment has erupted across Europe and the US, which is affecting his company Tesla more than anything. And dozens of Tesla electric vehicles were also reportedly burned in suspected arson attack in France on Saturday night. And Tesla's new vehicle registration have been on a steep decline in Europe, falling in France in the first 2 months of 2025 and plummeting in Germany by around 60% in Jan from a year earlier. And in the US, a series of vandalism incidents began on Jan 29th at a Tesla facility in Colorado. Over the weekend in New York, 9 people were reportedly arrested and subsequently released after a demonstration outside of Tesla dealership. And Cybertruck owners in the US have complained of negative reactions to their Angular, and a movement that calls itself the Tesla Takedown is now encouraging people to divest from Tesla and to refrain from buying cars or any other products or services from Elon Musk's company. The movement has gained celebrity support, and Japanese-American actor, most famous for his portrayal of Hikaru on Star Trek on Sunday, encouraged his followers on social network Blue Sky to consider joining the Tesla Takedown movement. This is not good news for the company, the shareholders, and the stock. And when Musk does focus his attention back on Tesla rather than the White House, he plays up the company's future in self-driving cars and humanoid robots. However, Tesla currently trails some rivals in China and the US in self-driving technology, as a number of companies are already operating commercial robotaxi service while Tesla Cybercab is not yet in production. Several Chinese automakers have also begun to offer partially automated driving systems that compare with Tesla's autopilot and full self-driving supervised options, either for free or at a much lower cost than Tesla. And the Alphabet-owned Waymo is way ahead, announcing recently it is providing 200,000 trips each week across San Francisco, Phoenix, and LA. Tesla and Elon Musk did not respond to requests for comments. And recently, Tesla stock went up before going down again on Monday after Morgan Stanley reinstated the electric vehicle maker as its top US auto pick, saying the company's artificial intelligence and robotaxi efforts could power growth even as the mainstay car business stumbled. The note dated Sunday was the latest from analyst Adam Jonas, a longtime Tesla bull, who has praised the company's push beyond autos as sales face pressure from the high US borrowing cost and fierce Chinese competition, including BYD. And industry data showed that Tesla sales fell 45% in Europe in Jan, while overall EV sales jumped 37% in the region. And Jonas said recent setbacks, including Tesla's first annual deliveries drop in 2024, signaled its shift from an automotive pure play to a highly diversified play on AI and robotics. He reaffirmed his $430 price target, which is one of the highest on Wall Street, which implies a 44% upside to the stock's last trade. And the remarks echoed Tesla CEO Elon Musk, who has pivoted the automaker to robotaxis and AI in the past year, even as experts argue that large-scale adoption of the vehicles could be years away due to regulatory hurdles and technological limitations. So what Elon Musk is trying to achieve, which will eventually take Tesla stock way up, it's not that easy. Adam Jonas is no stranger to bold Tesla prediction. In September 2023, he said Tesla's Dojo supercomputer could boost its market value by nearly $600 billion through advancements in robotaxis. And since then, Tesla's market value has gone up by $150 billion to nearly $950 billion. But its shares have trailed in the broader US market this year, declining 20% as early euphoria over Donald Trump's election went waned, giving way to concerns about weakening sales and CEO Elon Musk's White House engagements. While Elon Musk has promised sales growth this year with the launch of cheaper models, Jonas said that deliveries could decline in 2025, providing an attractive entry point. And in October, Tesla showcased its robotaxi while Elon Musk touted progress on its humanoid robot Optimus, which could eventually be priced at $20,000 to $30,000. Elon Musk has said that Tesla will roll out driverless ride-hailing services in California and Texas this year, but provided no further details.